All right, everyone, here we are with ticker symbol JMIA, Jumia Technologies. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. And to all my subscribers, welcome back. And before we jump into this chart completely and go ahead and dive into this, because I'm going to do a little bit of an analysis for what's been going on in the past and what to look for now as this is playing out closer to earnings. But one thing I ask from all of you, every viewer, every first-time viewer, every investor, every subscriber, if you find this video and the insight helpful and worthwhile, please hit that like button to let me know you watch this video. And it's the simplest and quickest way to say thank you for receiving this insight and that you enjoyed the information. All right, so let's jump into this chart. So Jumia Technologies actually has been in a run. It hit lows here of about $6 and some change, and from that point forward it's been rising up. It did a run like this towards earnings previously, and it reached up to $23, $24 almost, and here we are about to hit earnings in a few days. I mean days because the month is almost over, but all right, like a week and a half from now if you want to go ahead and get to the T on it. But the one thing I'm noticing that's a little bit different is that this run up, right, it rose up close to those highs and it dipped a little bit before earnings. Earnings was on August 12th, and this dip happened about 8 days before. We're not 8 days before right now, but we're 13 days before. And then it ran up again. Now, I'm pointing this out because this could possibly be what is going on right now. That means that we're actually going to continue to run up possibly. Now, I don't know if it's going to be higher or even higher than the highest points, because that's one of the most important numbers right now for this to hit newer highs. Now, if we go back to a couple more days before that, right, the run had started way back in July 23rd, and that's almost a whole entire 2 weeks to 3 weeks before that, and we're currently like a week and a half away. So something that's interesting to me is that it dipped and now it's quickly going back up. The question is, could it actually do a higher run than it did here during or a couple days before earnings, right? Or is this a catalyst that's forming just like this one, where it actually was rising up? It was very bullish before. It slightly dipped, right? This is the run before, and there's a slight dip, and then it just shot up to 23. So is this actually going to now shoot up higher than 23 and not do it how it did it here, but do it from this point forward? So those are some variables there that I'm kind of just throwing out there, and I want you guys to observe and see for yourselves with more time on the chart. I just wanted to point it out. But right now, this is currently looking slightly bullish in the sense of how it's been running right now. But the one thing that I see very interesting is the bullish run was great, but it's still slightly close to the 50-day moving average, basically showing you that the tug of war is going to be interesting, and the bulls and the bears can easily change this around accordingly to what the shareholders do and what the bulls and the bears decide to do. So let's look at this closely and see what is important for tomorrow and what is important for the days to come. So I want to go ahead, put this on our support levels here really close, and zoom in here, and our resistance. So you see this bullish run is great, but it slightly just sat right there on the 50-day moving average. It's literally a tug of war between the bulls and the bears. This looks great on the chart, but when you look at the whole entire technicals here of where it stands, it's still below one of the highest points in the recent days of 1973. It hit new lows here today in this bearish run, and then we're seeing it rise back up. It had a spike, and the question is, could the bulls hold themselves up? Well, this closed out literally on the 50-day moving average. So tomorrow's tug of war is going to be more than interesting, but very important to see if the bulls can continue this momentum or the bears are just going to reappear. And this is just going to be volatility up and down, sideways movement. Now, as we're seeing this bullish run, there's some key points here, but we're not going to talk about them right now. If they do break through these support levels, we'll look at those in the near future. But the only one I want to point out, just to have it there for the next coming weeks, is right here at this support level of 14.19. I'd write that down. Super important to keep in mind if it breaks through these support levels. But let's zoom in on these. So the most important support level, if it breaks through it and it's going to hit newer lows, is 15.29. But that one we don't have to worry about just yet, but it's always good to have those written down to know where this might be ending and what is the movement of this chart. So for the bulls to continue this momentum and stay above the 50-day moving average, which is 1753, and it's currently at 1753 for aftermarket hours, and that's what it closed at, the bulls need to break through the highest point that they reached in this bullish run before the rejection, and that's 1790. They need to turn that into a support, break away from it, hit newer highs, and hit new resistance levels to pull away from the 50-day moving average in an upward direction. On the other hand, we have what the bears want. The bears want to tear this down. They're literally on the edge. All they need to do is 1 cent lower, and they're in bearish territory to pull this below the 50-day moving average. Their goal is to pull away from the 50-day moving average in a downward direction. Now, just like the volatility went up, it's going to be very important to see how quickly it goes down, or if it holds up, to see what is going on in the behavior of the stock. If it was to pull down fairly quickly tomorrow or the next coming days for this week, the most important support level right now is 1566. If that gets torn through, I want to emphasize to all investors, pay very close attention to how this stock is reacting and how quickly it's moving to newer lows, and are the bulls trying to reappear to bring this one back up. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit that like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video. I will be discussing about the S&P 500 index and how it's been rising several points on scheduled dates. Whether the market's going up or down, these dates, the S&P 500 is rising up. Check out the video. I go into more detail about it. I'm not there to guarantee you profits. I'm not there to tell you to buy, sell, or hold anything. I'm just there to inform you on some great information that a lot of investors are unaware of or overlooking. Check out the video. All the information's there. The charts and the dates speak for themselves. I hope you guys enjoy it and inform yourselves and others about this great video and information. It's a weekly series that I'm doing. Don't miss out on it. Thank you guys so much for watching, and let's make some money.